Europe's manufacturing giant grinding to a halt. The Bundesbank slashing its growth outlook for Germany, putting the euro under fresh pressure. Reuters FX analyst Neil Kimberley has been tracking the moves on the single currency. Joins me now. Neil, we've come back to what? 129 and a quarter. My question to you is this, though. OK, we've seen a bit of movement. Does it actually matter what's happening domestically in Europe for the euro, given what's happening in the big export markets?
Yeah, I think the big export markets are key. I mean, if we cast your mind back about a week, we were down around 128.80, and I think Jamie had me on the show, and I was talking then about Eurozone exporter interest to buy the euros. Well, subsequent to that, we went up to 131 and a bit on Wednesday, and now we've come back to 129. I'm getting the same phone calls this morning. There are people telling me, well, this is not a bad level to buy, is it? It's an easy sell to the management when you saw 131.20 on Wednesday and it's now 129 and a quarter.
So natural demand at this level?
Absolutely, and all the way down to 128.80 and below 129, some Asian central banks tempted to pick them up because above 130 they didn't want to know.
Have you changed your call a little bit now on the euro? Because you've been quite bearish, but it seems to be holding up pretty well around these levels.
Axel, I would have done my boots on that move up above 131. I know I would have been short, and you've got to put your hands up and say, I've got this hopelessly wrong. But at the end of the day, we are still back here at 129. I'm just wondering now whether it's December. The man with the order is king. Are we 129, 131 going into year end? What we do know is, despite the bad news that you mentioned at the top of the programme, and despite the ECB and the Bundesbank, German industrial orders last month were very strong, and Reuters attributed it to demand for German exports coming from outside the Eurozone. Now, whichever way you want to cut that, that means hedges have to be put on at appropriate levels, and natural demand for euros to come back in. Should the euro possibly be lower? Maybe. I don't trust the politicians, I never have, but the bottom line is, you don't stand in the way of the market. And the market at the moment says the euro is still cautiously bid at the top end of its range.
All right. Looking into next year, I mean, it seems to me, talking to you and talking to a number of FX players, that the dollar is the trade of next year, without a doubt. So that says to me, fiscal cliff, we're going to get over that.
Yeah, I mean, fiscal cliff to me is more like a fiscal staircase. I mean, we know it's not all going to go pear-shaped on January the 1st. It comes in bits and pieces. I have to assume that turkeys don't vote for Christmas and that therefore they'll cobble together some deal at the last knock-ins. But you know what? When the America lost its AAA, did it make any difference to the market? In fact, they didn't. They went into US paper. It's what the market perceives about the US economy. Now, today we've got employment data. Reuters poll, 93K, unchanged 7.9%. We don't know exactly, because of Sandy, how it's going to play out. But the bottom line is, we think that the United States is doing comparatively better than other jurisdictions. The question is, does that translate into straightforward good for US, good for the dollar, or does it continue to be good for US, risk on, sell the dollar?
So, OK, so the question is, next year, is the risk on, risk off psychology going to be put to one side, and all this based on true fundamentals?
I certainly hope so, Axel, because this has not been a great year for people. You know, 1 minute's risk on, next minute's risk off. People need to make money, Axel, or frankly, they're not going to have a job. 1 year of underperformance, as Nick Parsons from NAB said to me last Friday, can be excusable. 2 years, it's almost becoming a track record. And I think Nick's got a point here. People have got to put money to work next year. And for me, it's far simpler to buy the dollar on good news and to sell it on bad news.
Is the other, just to finish up with, is the other no-brainer, you've got to be short of the yen at these levels?
Axel, you're preaching to the converted, my friend. I mean, I struggle to buy a currency where it's now on record that they're selling more adult diapers in 2012 than they are children's diapers. It's not a good idea. And if you look at the price action, the yen is offered. People are short yen. The yen strengthens, they unload, but they come back in.
We've even got a picture of a diaper for you there, look.
It's very pleasant.
But, you know, and taking that a step further, there you go. Look, Japan faces extinction in 1,000 years, says AFP.
And we'll still be talking about it on air.
We'll still be talking about it.
But the thing is, the market, if you're a hedge fund manager and the yen is turning weaker, this is potentially the trade of the decade. You have to be on this trade in some form, whether it's through cash or options. And what we're seeing is, because the market's been burnt so many times before, the market gets short of yen, there's a little rally in the yen, people take off some of the positions, and then they come back in again, and they sell the yen again. And if you look at what the politicians are talking, whether it's the LDP with Mr. Abe or the DPJ's Mr. Maihara this morning, they are queuing up to beat up the Bank of Japan. These people want a weak yen. It's an existential crisis for Japan. I talked about 85 by year end. I still stick to that. I think potentially the yen goes even weaker than that. Some people I'm talking to in Tokyo are talking about 90 for dollar yen. And if you're a hedge fund manager and you're not on that trade, you are roadkill.
Neil, as always, many thanks. Neil Kimberley. To our chart of the day, gold prices heading for a second week of losses ahead of that big payroll number. A trader at Lee Chong Gold Dealers says the weakness due to people cutting stockpiles before the end of 2012. But most investors remain confident the precious metal will be well supported in the months to come due to loose monetary policy adopted by some central banks. Gold up more than 8.5% so far this year and has made a positive return since 2001. That's it from us for now. Join us every day, though, at this time to take the pulse of the market. I'm Axel Threlfall. This is Reuters. We need to do a question.